Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, August 21st, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, mild correction continues. We're about 4.5% below the highs on the S&P 500. You can see over here on the trend gauge, we've got three red arrows depicting bearish/downtrend for market leaders. Added the yellow arrow today. Leaders did a pretty good job relative to the overall indexes. Short term, all five of the major indexes are trending below our short term 21-day exponential moving average indicator, also below the medium term 50-day moving average, and above the long-term 200-day moving average. Remember, markets do not get into serious trouble as long as the indexes stay above their 200-day moving average. So what happened today? ORAD 2, that's O'Neill rally attempt day 2, yielded a big rally from big tech, and this is despite yields going to making new highs on this most recent cycle. Bit of a surprise, but the strength was there. Maybe just a little too oversold. We're going to look at charts of the big 7, all 7 positive today. Here are the final numbers. Our 8 ETF composite, the RG8 up 0.77%, S&P 500 gapped up 1/3%, gave it all up, looked like a just complete failure, and then rallied strongly late morning into the close, ending up 0.69%. NASDAQ 100, similar pattern, up 1.61%. Dow, a laggard, down 0.1%. Mid caps up 0.1%. Russell 2000 small caps down 0.18%. Oil strong early but reversed, and financials, banks, weak. That's an uphill battle for the Russell anytime you have that combination. 60/40 global diversified stock and bond up 0.13%. Bond prices continue to go lower as bond yields continue to go higher. Remember the diversification spiel from Wall Street that you want to have bonds to offset the volatility in stocks, and they should move in opposite directions. That didn't work so well last year, and it's not working so well this year as yields continue to go lower, while we've had a pullback in stocks also. In-house GROTECTION up 0.77%, big beneficiary of our core SSO position as well as our NVIDIA position. We added one small buy today, didn't make much progress on it, but based on where we are with the indexes and with leading stocks, no need to chase when the market, when the wind is not at our back. We'll update the 21/21 list. Our new procedure is to finalize it over the weekend and present it on Monday, not going into the close Friday. We want to, I think we'll benefit by doing a better job of diving into what's going on with the individual sectors and then presenting the updated 21/21 on Monday. Let's get into it. Here's the S&P 500. Note, what we're going to see on all 5 of the major indexes is the stochastic finally hooking up. We attempted it last week on Monday and failed. We got further oversold over the last 4 days, the 4 days that closed last week. And another hook up, this meaning that the price, that's the thin black line, coming off the lows and hooking up and going through the moving average. That's sometimes it hooks up and doesn't go through the moving average, but it does. It's a start, let's say that. Second day 2 of an O'Neill rally attempt. Day 1 being the positive reversal, even though it was a red close. This is what's called a pink rally day when you close in the upper part of the range on the day. It's seen as supportive. And as we've described, there's a, let's call it a 7-layer burrito of support between 4,300 and 4,340-ish. You'll see all the levels when we get to the tail of the tape, but that's where we held on Friday. It's a logical place to stop. And for now, we draw a line in the sand below the lows of Friday and see if this rally develops into something, along with leading stocks if they go along for the ride. NASDAQ 100, similar situation. Uh, Pink rally day on Friday, follow through to the upside, actually closing just below the 80 MA. Let's check the 80 MA. We're 0.5%, I believe, below. Yeah, 0.5% below on the S&P. So that signals at least a little bit of relative strength on the NASDAQ. As you can see, we had it last Monday. We had it today, lagging in between, but pretty big up move, up 1.6%, going right into this declining 80 MA. Now, the declining 80 MA has been resistance for 14 days, as we've been highlighting on the tail of the tape. So, the next change for the next positive change in character that we want to see on the market is to get below that declining 80 MA and then tackle the 21-day exponential moving average, which we use as our short-term indicator. Also notice the stochastic hookup there, a little bit more pronounced. Let's go to the Dow. Dow, actually no hookup there. Minor slowdown in the slope, let's say that, but 4 of the 5 hooked up. The Dow, you can see basically an inside day, not finishing positive, still below the 50-day, and not near the 8 EMA either. Let's go to mid caps. The MDY didn't make a lower low, made a higher high, didn't touch the 200-day moving average. It's hard to see, but there is a stochastic hookup there also on mid caps. IWM small caps, it's there also. We undercut the 200-day moving average and closed above it on Friday. Didn't touch the 200 today, basically an inside day, but closing in the upper part of the range is a positive on small caps. Let's go to the VIX. We again hit the declining or close to the declining 200-day moving average, which is what we tagged on Friday. On the VIX, making a lower low while the indexes rally. That's good stuff. We want to see this fade even more and get back below the 21 and the 50-day moving average, and preferably back below this 15 level, which is where the VIX was residing while the market was in rally mode. Let's flip to the dollar. Dollar started off near flat today, down a little bit on the day. You can see near flat, a little bit of strength, and then fading flat in the afternoon. Precious metals had a good day. Let's start off with silver, SLV, the leader of the three on the day, up 2.35% into the declining 21-day moving average. Gold stocks, GDX, up nearly 1%. Outside positive reversal there, meaning made a lower low, but then a lower high. GLD, gold, very tight range over the last 4 closes, up 1/3%, a little less than 1/3% on the day. Bitcoin had a big sell-off late last week, and see the gap down on Friday, inside day, so really not making much of a recovery at all. Let's flip to bonds. Here's the broad bond index, BND, making lower lows. The long bond, TLT price, also making lower lows, which means we're going to see higher highs on the yield. Here's the TYX 30-year, higher highs, now surpassing the levels from last October. TNX, higher highs, also surpassing the highs from last October. That's not good for stocks, but as we said today, it didn't matter, at least for one day anyway. So that's all the inter-asset correlation that we discuss in each video. Let's go to the tail of the tape now. You can pause this. You see the stochastic hookup on 4 of the 5. It's not all, but all are oversold, as are all of the RG8, and they also did get a stochastic hookup. We're oversold on the NASI RSI. Let's see if that can at least slow the descent. That doesn't update till 6 o'clock on stock charts. Dollar strong, Yields new highs. That's not a benefit, but as I said again, it didn't matter today. News, the weekly focus this week is on the increasingly higher yields. Wednesday, after the market closes, NVIDIA will have their earnings report. That kicked off a huge rally 3 months ago when they announced that earnings report and massively upped their guidance for the quarter. And Friday morning, Jackson Hole, Wyoming, a speech by Fed Chair Powell. I'm sure we'll see some reaction to that. Day count, second, as I mentioned, second day of O'Neill rally attempt. 14 days below the 80 EMA, 10 days below the 21 EMA. Expectations stay negative unless we can get back above the 21. Sectors that were strong today were tech, as I mentioned, semiconductors, software. Palo Alto gap up on earnings that led a rally by cyber stocks and fed over into software, the broad software index. Biotech also. Oil started strong but reversed. We're looking for a way back into them if they, a lot of good charts. I posted on Twitter over the weekend. We had 220 of our 1,000 plus stock liquid universe. Only 220 of them above their 21-day moving average, and a third of those were oil stocks. That signified, really how weak the overall market has been. But there's a lot of insight into those numbers when we do our weekly review, in that the counts were the lowest since the last time the market bottomed, which was in March. So you can only stretch the rubber band so far, is the takeaway from there. We kind of talked about that with the 7 layers of support around that 4,300 area, which we did not pierce. And all this is a game of math and a game of weighing the odds. There are no sure things in the market, just probabilities and or scenarios and probabilities. On the downside, in addition to oils reversing the dollar, homebuilder stocks continue to lag with the increasing interest rates, banks, and the defensive sector, staples, utilities, and real estate. We're going to look at the Big 8 charts. The only buy that we did today, Uber broke above the 21 right out of the gate on really big volume, didn't hold it, faded to a 0.13% close. Chart looks great, holding the 50-day, but that pumped our beta up slightly to a 0.84. Bottom line on the day, strong rally in big tech despite higher yields. We'll see what rally day 3 brings us. Why do we wait till day 4? Because very often these first couple days when you get stretched to the downside are just short covering. And the studies that O'Neill did, short covering dissipates by the 4th day. And then if it's really ready to attempt a rally, it's more reliable on day 4 plus. And that's part of the process that we employ here at Revere, statistically sound, math-based, no guesses, no opinions. The price is what drives our decisions. So let's take a look at, first of all, what we bought, which was Uber. Bring up the 5-minute chart. You can see the big move higher out of the gate. Volume was pretty strong. Bounced right at that at near yesterday's highs, which was also the highs, or sorry, Friday's highs, which is also near Thursday's highs. Normal support area. We're feeling good about it, but as the market was giving way here near 1030, it gave up that breakout, came down, held the 44 level. If you zoom out a little bit, you can see that this 44 level has been a battleground, and we, to the benefit, to the plus side for Uber, we held and we got back above it. Notice the big support battles that have been going on over the last 2 weeks there. If you look at the daily chart, this is really trying to carve out a bottom around that 50-day moving average. We got the stochastic hookup again too, just like we did on Monday of last week. We started with a very small position. We'll add to it if it continues to work and if the overall market improves. Now let's look at the position that really drove the portfolio gains today. That was NVIDIA. It got an upgrade. The stochastic cross occurred last week in this off of that 400 level, which served to shake out a lot of people. Had a 2-day rally last week, another 3-day sell-off, but didn't make a lower low and reversed higher by the end of the day on Friday, putting in a support day, and then massive move up on nice volume today. In fact, look at the volume bars are trending in favor of the bulls with higher days of higher volume than the pullback days, certainly over the past 2 weeks. Big move up, 8.5%, up to 470. Let's look at a weekly chart of it. Not higher highs, as you can see. 480-ish is the high. Uh, going back a couple of weeks, but survived that 400 area on the pullback, and a great day today for NVDA. Let's go to the other 7 of the big 7. The second best one today, Tesla, also got an upgrade. Sometimes these upgrades don't mean anything, but when you're very oversold, sometimes you just get all sold out. Got that. You see how buried the stochastic was on the daily after 6 straight down days on Tesla. So shorts covering up 7.33% into the declining ADMA. Let's see if some more strength can come in. Now let's take a look at the rest of these charts, because if the NASDAQ 100 is going to right itself, these big 7 are going to have to drag it. Here's Apple. You can see made the lower low Friday. Looks very similar to the index. This is that 3-candle morning star combo. You stop going down, you reverse, and then you get into the third candle gets into the at least halfway into the body of the first candle from 2 days ago, and that's what we're seeing here. But we really want to see this get back above the area that acted as support after the second day of its earnings, which also corresponded with this area over here where we filled the gap. That's the 176-ish, 176.50 to 177 area, which will also put it back above the ADMA. Second biggest big cap, Microsoft, similar candle combo, actually making a higher high than its Thursday and closing above the ADMA. Note the stochastic hookup there also. Let's go to Google. Never got to oversold. This has been the strongest of them. It's actually kind of failed this breakout last Friday, but got back above the 21-day EMA today. So Google, the overall second strongest chart behind NVIDIA of these stocks. Let's go to Meta next. 3-candle combo, again, hook up on the stochastic. Amazon, which we only got stopped out of last week, never made it to oversold because it was the strongest, regaining the 21-day today, bouncing off the 50-day. So a successful hold of the 50-day, regain of the 21-day. But actually, I guess it closed right on it to the penny today, but it found support where it needed to, along with the NASDAQ 100. Did I get to all 7? 1, 2, 3, 4, 5, 6, 7. Yes, we did. Okay, let's go to the 21 over 21 list now. We'll start with we punted one more from last week. TDW hit its pivot plus 20 to 25% gain, failed breakout after its earnings report, closed actually slightly on the 21. See some insider buying too. We're going to keep this on the list to possibly come back on, but we're going with some things that have been stronger lately, and plus we still have 3 oil stocks on the list. So uranium stock, CCJ, broke out today on nice volume. That's the first ad. Applied Materials, positive reversal on its earnings report into the 150 area, back above the 21-day stochastic hookup. Number 2, Light and Wonder. Don't know a whole lot about this, but I know the chart looks good, and those are great fundamental numbers with a 33 PE. Looks pretty good. We'll be digging into this one a little bit. Interactive Brokers bounced off the 21. Positive reaction after its earnings report. That's a breakout from a nice 104-day flat base. Palo Alto, this was the earnings reporter today. Got up above the 50-day moving average on its earnings gap. Stochastic hook higher. Arista Networks made a higher high after consolidating for 2.5 weeks after its earnings report. NVIDIA, we already reviewed, adding that back. CEIX, this was the last one that we added on Friday, or actually the only one that we added on Friday, as this was a very obvious ad. And we'll go quickly through the remaining 13. AAOI continues to have a very strong rebound today, up over 20%, making higher highs after its earnings report. Lilly, just gonna let page through them so you can see them. Lilly, NVO, APP. These things have a lot in common, and that is they gapped on earnings. They held the gap, showing relative strength, holding a key short-term moving average on the pullback. Axon, in this case, holding the 50 and the 21. DRV, this is a play on inverse real estate, forming a nice cup. Real estate, big underperformer with the higher interest rates. NRGU, the broad energy sector ETF. It's a triple of 10 big leading oil stocks, forming a nice tight 5-day pattern there after breaking out. Bunge bounce off the 21. Cheniere, that's LNG, nice move, undercut and reclaim of the 21. Vertiv Holdings, one of the strongest in the market. TBT, Weatherford. Did I miss Celsius? No, I showed Celsius, didn't I? Yes. If we didn't, we're going to do it. Here's Celsius. Big gap up on earnings, undercut and reclaim the 80 MA. A lot of them high on my list, but we got to see follow on strength from the market, preferably the 4-day follow through. And that's going to wrap it. As always, love to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Remember, it's not how much you make in the market, it's how much of that you can keep. If the bottom was put in on Friday, we're pretty happy with the controlled drawdowns that we had. We're basically in line with the market on this pullback, and we've got plenty of dry powder to put into the market if leaders form nice bases and continue higher. So, and of course, remember to, if you're watching us on YouTube, subscribe and click the like button. The algorithms like it when you like our videos, and we really appreciate it. And with that, I'm going to wrap up the video for Monday, August 21st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.